Compass. We're recording this week's episode on Wednesday, June 18th. It's kind of important with all the geopolitical stuff going on in the world to timestamp these because they can get out of date in a hurry. With me, as always, is Sam Pelez, President and CEO of Olive Resource Capital, and I'm Derek McPherson, Executive Chairman of Olive. This week, we're going to talk about a topic that we've been invested in, a theme that we've been invested in for a while. But also something we've sort of mentioned offhand a couple of different times, but really want to delve into the world of platinum group metals. It's a very interesting market, and it's a very small market, which has the opportunity to create outsized move and outsized returns. Sam, as I was getting ready for this episode, I delved back into the archives of my time as a research analyst. And when the first time I launched on palladium, it reminded me why we're in the space, right? Like, I mean, palladium went from sub $1,000 to plus 1,500, and the reason is or plus 2,500, right? And in about an 18-month span. And the reason that you get such a big move is that you have small markets. The total supply, the total demand, for palladium forecast for 2025 is like 9 million ounces. Total supply demand for platinum is what, 7 million ounce market. And so it doesn't take big moves. It doesn't take large scale mines to come on or off. It doesn't take very much to actually move the markets materially. And so that's what creates the opportunity for outsized returns. The other part that's interesting is you can go through long periods where the fundamentals are in the favor of a price increase, but nothing happens, which is kind of where we've been. As I was digging through the platinum palladium markets, and just, both platinum and palladium have been in sort of sub 500,000 ounce deficits for the last 3 to 4 years, or 2 to 3 years, depending on which metal. Palladium since 2022, platinum since 2023, and so those are huge. In my mind, those are huge numbers from when you think about the context size of the market. That's 5% of the market. And so oftentimes these are things that can get taken up by secondary supply, but eventually these things catch up and you get a fundamental catalyst that drives the price higher. And it looks like we're starting to see that. If you look since May 1st, you've got platinum up 33%, almost 33%. You've got palladium up almost 12.5%, kind of being dragged along. And so, yeah, it looks like a really interesting moment.
I think we should highlight why we're talking about this now. And we've been investing in the sector for the best part of 18 months. And our thesis has been that these deficits are present, are real, tangible. We were missing the catalyst. The catalyst seems to have come out of nowhere, frankly, over the past 2 months. And it's still debatable what the actual catalyst is, but it looks like it's just genuine physical demand out of China, possibly predominantly as a substitution for gold investing, like gold physical investing, where people actually literally purchase bars of gold and stash them on their bed. With the price differentials now, with particularly platinum, people have started doing this replacement for platinum. And you and I know that the only thing that it's a real catalyst is when there's physical delivery of the metal. Because if you're trading on futures and on the stock exchanges, on the ICE and New York, you can always cover those with financial instruments. But now there is actually literally, like, the supply of metal is being taken out of the warehouses and shipped to China. Where have we seen that before? Gold, quite literally. If you go back a few years, remember we talked about how much physical gold was going to China, never to be seen again. Well, it's the exact same situation now, with the big difference that PGMs are industrial metals that have an actual genuine demand for everyday use that so far doesn't look like they can be easily replicated by anything else. So I think this is structurally a fantastic market to be in. Like I said, we've been building a position for the best part of a year and a half. We have some holdings that we'll discuss here shortly, but structurally, I think this market is pretty much set for one of those runs that you just mentioned, where it goes from sub $1,000 to who knows, over 2,000, over 2,500 in the case of palladium in the last cycle.
Yeah, I think the other substitution is besides sort of that investor demand is interesting is jewelry, right? That's something that's been noted. Well, a source that I use a lot for platinum palladium as far as a good source of information and good intel on the market uh, is Johnson Matthey. They're a major producer of catalytic converters. They put out a PGM report every year, and so it's where we draw a lot of our intel from for this market. And so something that it's publicly available, so it's something everyone has access to look at. The other thing that's going to drive the market here a little bit, and we talked about, you and I have talked about this separately, is South African rationalization. So there's a big element, at current prices, even with the moves that we've seen over the last little while, there is South African mines are generally very old and very deep, and so those mines eventually will come offline. When prices get low, we see a steady flow of closures. It's a bit of a game of chicken because you don't want to be the first company to close, because then that starts to move the price. But these higher cost operations, this is very deep old mines, very very labor intensive. They're going to start coming offline, and I think that's it. And and that's important, particularly for the platinum market, right? Because platinum market, about 56% of the world's platinum is produced in South Africa. Mines. This is overall supply, so includes recycling, but also relative to palladium, where you've got 24% is from South Africa, 26% is from Russia, and then you've got probably an equal amount somewhere in there, the 25 to 30% that's secondary supply. So you've got to, those are the big elements. I think it's probably important to know, platinum and palladium, the main consumption of platinum palladium is automotive, by far. Palladium more so platinum. They're used in catalytic converters, as we mentioned, Joss and Matthey. What drove, besides the ongoing deficits, what drove palladium the last time was a change in emission standards. And so they increased the amount of palladium effectively that was required in ICE vehicles. And so that drove it, that in that 2019, 2020 timeframe, that's what drove the price there. 2018, 2019, 2020. But the reality is that automotive demand with plug-in electric vehicles is actually not going to decrease as a cleaning agent of air or of emissions from gasoline engines. Platinum and palladium work really well when they're hot. When you ever get into hybrid electric vehicles, those engines run very cold. And so you actually need almost as much platinum palladium. So there isn't really seeing a decrease in demand from that perspective, although the pure electric vehicles will have an impact. The other thing is that because of that period, if you remember, historically, platinum trades at a premium to gold back to 2014. So from a psychology perspective, but prior to that 2018, 2019 period, palladium historically traded at 50% of platinum, and that was simply because of both supply demand fundamentals. Supply, as in generally in the Earth's crustal abundance, you get 2-to-1 palladium to platinum. The second is that platinum was used more in catalytic converters because it was a little more efficient. But as that price, when that price was 2-to-1, these catalytic converters went heavy palladium, 2-to-1 platinum to palladium. When it flipped, now these catalytic converters are more balanced, right? You have a mix of platinum and palladium in it. The automotive companies have reacted. It's been 5 years. They're thrifting palladium in favor of platinum. And so now that's become a little bit more balanced, if you will.
Yeah, and I think it's important to highlight this automotive demand, because with the increase in availability of battery electric vehicles, we've heard many times that the need for catalytic converters is going to be reduced. If you actually look at the data, there was a small reduction, I think more associated with the pandemic rather than the battery EVs, because I think 2024 is back to 2019 numbers. 2025 is expected to be back to like 2020-ish numbers. So I think we're sort of getting back on track. And actually, the more modern the vehicle, and especially hybrids, actually have greater content of PGMs than your historical combustion engine vehicles from the last decade. So that the intensity of use of these metals per vehicle is actually increasing. And beyond that, people have to remember catalytic converters are not exclusive to cars. These are used also in many industries. Um, for multiple purposes, mainly obviously for emissions reductions, but also for other specific uses, and that's not stopping either. So the baseline level of demand after that blip, it's sort of now coming back on track. And what's not coming back on track is the expansions, the growth on the supply side, and like you said in the beginning, we're in a pretty serious deficit. I think um, in the case of platinum, we only have about 18 months worth of overground inventory relative to the deficit. So, for any market that needs mine building, that's not enough time to put new capacity online. So we may be approaching a pretty difficult moment here in the next 2 to 3 years. I think that's well everything I want to say about the baseline demand.
Yeah, we'll
Um,
probably talk about Russia a little bit here too. Russia is the biggest single producer of palladium in the world. The Norilsk mine is massive, and to fund to fund the war efforts. So like we say, like Russia's like 28% of palladium supply, or 26% of palladium supply. Like 25% of that is Norilsk, so it's one mine. Um, what's been happening is that Russia's been trying to fund a war effort, and so pretty much everything that's not nailed down has been out the door. So they were actually, in my reading, prep for this, they were actually pumping all their platinum out. They had on ground inventory, so that's something that definitely affected the price, and it's something that's going to continue to affect the price of palladium. Um, you know, that palladium is making it to market still, right? It's just going, for the most part, it's going a slightly different route. Although, oddly enough, palladium sponge is not one of the things that's sanctioned in the U.S. So it's amazing. The things that they really need seem to get through no problem. So there's definitely a near term. I would note, and this is kind of hot off the press from Johnson Matthey's recent report, is that they're not predicting a significant deficit of palladium for this year. That's assuming a lot of things are stagnant. But I think overall, I don't think that changes the thesis. So we come out of years and years of decline. So the consequence of the interesting part is, and to harken back to that period in 2020, platinum and palladium have been out of favor for a long time by that 2018, 2019 period, particularly palladium. People hadn't looked for palladium-rich deposits were considered to be very much out of favor because he wanted the richer version from platinum, and platinum heavy mines were the ones that were getting built. And what we saw in that 2025, or sorry, that 2020 period, that 2019-2020 period, and when I was at Red Cloud, we funded a lot of these companies, is that there were a bunch of palladium companies that came out of the woodwork, a bunch of companies that were sort of had PGE nickel deposits that sort of formed and came into being, and people started looking for it more. I think that was an interesting development. So there actually are a number of deposits and projects and companies kicking around. So there's lots of places to put money, if that makes sense. And so, which is unlike where it was in 2019, 2020. 2019, 2020, we were, companies were being formed to look for it, or there was your early stage exploration, and there was enough capital around that now you have a few things to invest in. So taking that back, as I said, taking back to our process, right? We identified this opportunity. We see the market's in deficit. We see, we know that at some point they move. And so for our process and how we look at things is that we want to be, you have to be in the developers early, right? And sometimes that can be painful in the short term because developers are somewhat illiquid by the time you get into it and the market's moved. And we've already seen that, right? Like some of our positions are up 40 to 50% over the last month in that platinum palladium space. And so we've already seen that. And then the larger companies like Sibanye Stillwater we'll talk about, they're, you can buy them later simply because they're a little more liquid and you can get in as the momentum moves, even though you might miss a little bit of that first part of the move.
Should we start talking about the names sort of like market cap wise, like large cap producers, and then go down to the developers?
I think that's the way to go. I think that's the um,
Well, we're obviously not going to cover all of them. That's not the point of this video. I think we'll
no,
cover the ones that we care about,
we'll
that
cover the
we have
ones.
studied, that we have studied. I
Well,
think it's
and that we own, which is the
and that we
other that we own, which
I-
is
it,
we have a pretty good basket, I think, when we get there.
yeah. So I think for a start, is important to notice that there's a new player in town called Valterra. Valterra is a spin out of Anglo American, and that's effectively the Anglo American Platinum or PGM business. Um, it's it's um, it's only been spun out for about 4 to 5 weeks, I believe. We bought Anglo American in anticipation of this. That trade has worked out very well. This is up maybe 20% from the Spinco value. The remainder Anglo American has also gone up. So anyway, it's been a good trade so far. But why is Valterra important? Well, they effectively own the stellar PGM mine in the world outside of Norilsk. And maybe Norilsk is different because it's not a predominantly PGM mine. Um, the Valterra mine is. It's in the western limb in South Africa. It's called Mogalakwena, and it produces something like 700,000 or 800,000 ounces of platinum and palladium predominantly, a majority those two, and it's actually pretty evenly matched between the two. Actually, it's greater content platinum. So for those who are platinum purists, this is probably as good as it gets in terms of a PGM of a platinum opportunity. The grade at its mines is pretty good, and I think this Spinco is going to give it a lot of visibility that people previously didn't want to own through Anglo American. The stock has traded well. I do have to note that it trades in London, which is um, not ideal. That's not where the biggest flows of capital are for mining anymore. That has migrated certainly to New York and Australia, and to a lesser extent to Canada. Um, but it's a name that we own, and it's a name that we like. In contrast to that, the name that we've owned the longest probably in the liquid space is Sibanye. And what's interesting about Sibanye is that it's more diversified. With Valterra, you're taking all of the South African risk. Sibanye is originally a South African company, but in 2017, I believe, or 16, they bought the Stillwater complex in the US, which is, based on my knowledge, the largest PGM um, mine in the Western Hemisphere, or in the Western world, as we call it. Now, that acquisition was fantastic. They had an excellent run over the years. That mine is now partially in care and maintenance as a result of low prices. Um, so it was one of the first ones to blink. Rightfully so. They were not making money. That that's a company that trades in New York. A lot more liquidity, a lot more visibility. It's more diversified also in terms of battery metals. Has investments in some lithium, cobalt refineries in Finland and in France. So overall, just a more well diversified sort of like new energy materials type company. Sibanye is much more of a palladium dominant company than platinum. So I think from the two larger ones that we care about, I think that's the biggest difference. A lot more platinum exposure through Valterra, a lot more palladium exposure through Sibanye.
I would know just on Sibanye, there was a management change there just recently as well. Longtime CEO uh, stepped down or left. So I think
No, it's
that's
a yeah. So Neil, he's a fantastic CEO, visionary guy. He's stepping down. I think it's in September. It's part of a how do you call it, management overhaul based on age, and it's just like a pure board directed exercise. The management there has been excellent, and I have the expectation that the new management coming in, it's going to continue that. So we like both of those names, but like I mentioned, they have very different. Even though they're within the PGM space, they have very different verticals, and they'll respond. Right now they're responding together because obviously there's an onslaught of dollars coming into the market. But as people get more refined, expect one to outperform the other based on the levels of exposure that each one of those has.
Yeah, I think the word you were looking for is succession planning, Sam. That's
That's the word.
yeah. I guess the other large scale Western Limb platinum palladium producer that happens to also be a copper miner, that's probably worth talking about is Ivanhoe.
We've all known that Ivanhoe has a pretty large platinum project in the back. It's been overshadowed by the success of the Kamoa-Kakula copper complex in the Congo. Even for me, I've known the company for a long time. I've visited all of those assets. And even for me, it has been kind of overshadowed by the success of the copper. So I actually went back earlier this week to actually look at the project and what's going on. And what's going on there is pretty impressive. This will be, by 2029, the largest PGM mine in the world. Not Norilsk, like I said, that's not a primary PGM mine. It'll be the largest primary PGM mine in the world. It's a two-stage process. Stage one, by next year, they'll be producing something like 450,000 ounces equivalent. And then stage two by 2029, which should put them well north of 1 million ounces of platinum P3, as they call it, equivalent.
That's a maybe stop there for a second because most people 3E is probably not something people know. So the way platinum palladium miners, when they talk about grade, they call it 3E. So they'll go 3E or 4E depending on what you have, but it's basically platinum plus palladium plus gold, right? So if you have half a gram of if you have a gram of palladium and a gram of platinum and a gram of gold, you're 3 grams a ton on a 3E basis, right? And so it's important to know just from a language point of view to understand that.
Right.
Or a terminology point of view.
So they should be well north of 1 million ounces by 2029, and more importantly, this is going to be long hole stoped with pretty sizable stopes. But what happens in South Africa, and the reason why there is such pressure now in the industry, is that the mining zones are so shallow that you can't use traditional mining methods. And if you do, there's a lot of waste that comes with it. It's not very efficient. The biggest thing with the Platreef project, which is Ivanhoe's, is that it has many areas where the zones are 20 meters high. So you can take pretty sizable stopes of resource grade of 3.5 to 4 grams a ton. So it's more of a bulk mining operation. And with that kind of capacity that they've built or that they're currently building, in a good market, this will be a monster asset.
I think that's I think the point that you made on South Africa is an important point, right? We talked about, and I'm glad you pronounced it, but Volterra's asset, which is also in the Western Limb. You have Ivanhoe, Platreef, there's a couple other projects up there. So actually, if you go across the border, I think it's Zambia on the other side of the border. You actually have a couple similar projects up there. I think Implats, their big mine is on the Zambian side. I may have my African country wrong, so please forgive me
Zimbabwe,
for that.
yeah.
Zimbabwe, yeah. And so I think that's that's where right now majority of that South African production is these very narrow, very difficult to mine underground, like guys crawling in rat holes. Like it's a very difficult miner, difficult, deep underground, a lot of manual labor. Whereas the transition in South Africa for platinum palladium mining is into what we see at what Platreef is going to be, these big, large stope type operations. And so I think it's a very interesting, it's an interesting opportunity. And obviously South Africa is going to continue to be an important part of the platinum palladium trade going forward. But one of the things that I when I originally launched on platinum palladium years ago, or I guess 5 years ago now, one of the things that always stood out for me is that you have half the world's production, a big chunk of the world's production comes out of South Africa, and then the next biggest chunk comes out of Russia, which leaves not a lot for the rest of the world. And so I think in an era where um, where we're looking at sort of rest of the world, where allies, security of supply and allies become very, very important. All of a sudden, assets in other parts of the world start to be a lot more interesting. Um, so jump into a couple of those. Maybe let's go to Brazil first and talk about Bravo, a name we've held for a very long time.
Yeah, so we've talked about Bravo on the Compass before, and number one, I think Brazil is a fantastic mining jurisdiction. Like every jurisdiction, it has its problems, but in Brazil, it always appears that you can always overcome them. In the case of Bravo, it's in Pará State, one of the better, one of the best areas in the country for mining investment. The management team is exceptional, and they have a lot of skin in the game. But what attracted us to Bravo is that there is a 15 million ounce resource of pretty damn good grade from 0 meters to 200 meters depth. You get 15 million ounces just there. There's deeper holes that have hit the structure and have grade. They're not in the resource envelope or in the pit design, but you can be rest assured that this over time, my bet is that this will far surpass the 15 million ounces easily. So from that perspective, you're looking at a tier one asset by any measure. More than 10 years mine life, exceptional grade, pretty much from surface in a good enough jurisdiction with great management in place. That alone is worth everything that company is worth on the market today. But if you overlay that with other exploration success that they're having on the same parcel of land, on the same license, then I think for us this is one of our key holdings. It's one of our top five, and actually we've continued to add to our position. Before the recent run up in prices, this has gone up about 50% since this PGMs story took off, and we're still buying because we still think there's a lot more to come on that name from multiple fronts, not just from the exploration area, from the exploration perspective.
Yeah, it's a good name, and I think the other thing that's kind of important about Brazil to keep in mind is that it's one of those countries that straddles the line. It's one that has relationships both with sort of the West, in the Western Hemisphere, and as a BRIC country, and so I think that it's that as a jurisdiction. I mean, the natural thing is you end up with more buyers of projects at that point, or more buyers of offtake, or more potential financiers. So I think that's an important. Brazil's good. This isn't going to be market cap order, but let's stick in Brazil because the other company, the PGM company that we hold in Brazil is Valor. A little bit smaller deposit, 2.2 million ounces at kind of 2-to-1 palladium to platinum. It's 3E grades, just over a gram a ton, but it's at surface, and so really attractive from a mining perspective. A group that I think more so than Bravo from a less so from a developer side, but more so from an exploration side. Huge belt of PGE targets that just need to be advanced and explored. It's held by it's a Discovery Group company. The chairman and CEO there owns almost 20% of the company, and so they're fully vested in making this thing move ahead. And so I think we really like it from that perspective, both because it's got a decent development project already, but also has significant exploration upside. Obviously, in what had been a tough market for PGMs until May, they started to get creative in how they're going to move the company forward. Did a really creative financing in Q4. That's how we got a big chunk of our position. The other thing that they've been doing is they're in the middle of a merger. They're buying a gold company to the south of them called Pedra Branca, with a project called Pedra Branca as well, which is the same name as theirs. And I think that's a really good. Our view is that's going to be a good merger. Consolidates a big district. There's unlike a lot of mergers, there's actual synergies there as far as exploration teams, etc. Groups that really understand the project. So I think that's a really interesting. That's I think a real positive step for this company. And so it's been probably, even though it's up 54% or 64% since May 1st, definitely one that still has lots of room to go and is probably slightly impacted by that income. importantly, there have lots of in the money warrants. So I think there's potentially something to do there. And then the other kind of nice bonus on Valor, they did it once already with the Uranium Spinco on their one of their other Kikavik project. I expect that they will do the same again. They have a project called Hatchet Lake that they've funded both with their own money and with money for some outside investors. I expect that's going to be monetized to the benefit of shareholders as well. So, I think there's lots of ways to win on this name, and you have smart guys at the controls with Jim Paterson and Discovery Group, and so one that we you kind of invest in and tuck away and benefit when the PGM market starts to move.
Do you want to talk about our other Australian holding?
Yeah, absolutely. The other Australian holding. So again, now fully off the. I guess we went from. We're moving east to west from a political sense with this discussion, but the last one is the last PGM company that we hold that we're going to talk about is Chalice. Again, another large scale project, 3.8 million ounces on a 3E basis. Obviously, I would note, particularly for Bravo and Chalice, they actually have and actually those Western Limb projects as well. They actually have a chunk of nickel, cobalt, copper in there as well. There's like a base metal stream attached to them as well, and which Chalice has as well. So just as they're not just there's a kind of a broad basket. Chalice is about 4-to-1 palladium to platinum, so a little more palladium heavy. So not maybe doesn't benefit as much in this market, although it is up 40% since the 1st of May, at 2 grams a ton. I think the big thing here is it's a large scale deposit. So the numbers I quoted are the smaller version. They have a smaller kind of starter project. And then they're looking at in the future at a much bigger, larger scale project where they get out into some lower grade zones. And I think the stage development here probably makes sense. The project is in Western Australia. And we've talked about this before, but it is arguably probably the best mining jurisdiction in the world, from both a risk, it's a modern jurisdiction from a legal perspective. It's you've got reasonable timelines for permitting, etc. It's one of
a lot of human capital
and
as
a lot
well.
a lot of human capital to make things move, and it benefits from the Aussie dollar being weak when it is weak. So I think those are all things that really fit the give it a great jurisdiction. One of the challenges that they did have was metallurgy. They weren't getting as much recovery, which was kind of impacting economics. One of the advantages of metallurgy is that once you unlock it oftentimes it's almost free money, because you go from a very similar cost, and recover 50% of the metal, and all of a sudden you get 5% more, and costs don't change that much generally, and so all of a sudden you get 5% more for free. And so they've been doing a lot of work on metallurgy. Those are the 2 recent updates, one in February and one just here in June. Recoveries seem to be improving there. I think that bodes really well. The other reason we were comfortable investing in it, and I think this is an important part, and similarly with Bravo, and with these development stage ones, and similarly with Valor, because we knew that they could fund it, is that they have capital or access to capital. It's one thing to invest off cycle in companies when you do it, but you got to make sure that they can survive to the end of the cycle, end of the trough, and when the market starts to turn, and you don't necessarily want, as soon as the market starts to turn, them to kill their momentum by going out and raising a big whack and dough. So I think that those are when we started investing in Chalice, it's a little bit less now, but they had $100 million Aussie over $100 million Aussie in the bank, and they were doing development work, the not fun stuff. And again, we view that management team as very good. And so, again, good management team, great project, the opportunity to step in at a pretty discounted valuation, with our expectation that the cycle turns and the stock goes up, and we're starting to see that now. A little bit longer episode from us. Talked about both our development and our development / exploration and our large cap PGM names. We think that there's a PGM market coming. Early indications are there is, and we're well positioned. And hopefully this helps you as you start to look at the PGM market.